Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today I think it's better to take a look at Great British Pound by a few reasons. First of all, in euro currency you can see nothing is going on actually. Market is just waiting when the dollar index will hit the same level. So market stands here for almost 3-4 sessions around this area, while dollar index is creeping higher and almost has completed the predefined level. So this action mostly is based on other currencies, because you know euro currency takes the 70% of the dollar index value, but euro currency stands flat, as you can see, around the major support and around the ABCD pattern, while the dollar index is just coming to it and just few points stands till this target. It means that once dollar will hit this area, both assets as the euro currency and dollar index will appear at agreement level. So on the dollar index will be resistance, on the euro currency will be support, and after that the reaction that we talked about yesterday and today probably will start. So some pullback here is possible to happen. So while we're waiting what will happen on the euro, we're turning to Great British Pound, because we're coming to interesting moment. Tomorrow it will be Bank of England meeting and voting on possible rate cut. So there was a lot of discussion about the rate cut, and just a week ago it was the 75% probability that Bank of England will cut rate for the 25 points. In the weekend, it was balanced 55 to 45% in favor of the rate cut. And take a look what we have right now. Just the session before the meeting, we have 50-50 probability of the rate cut. It means that market stands really in equilibrium. So you know probably, guys, that currently it is Victorian relations, Victorian sentiment, some euphoria and inspiration stands on in United Kingdom society on the possible abandoning of the European Union, and Great Britain is coming closer and closer to this day, 31st of January. Well, it will be, of course, not the final divorce, but it will be some transition period. But still, that will be really remarkable date for the country. And supporting of this sentiment, somehow I suggest that probably Bank of England will keep rate intact. They will try to use, for any central bank, it would be better to keep rates a bit higher if it is possible, because in this case they just keep room for possible rate cutting in the future. And they will try to use this sentiment, use this positive inspiration that stands in the society and among the people. They will try to use it just to postpone the possible rate cut on the next meeting, if it will be necessary. Because also they see, also as we do, they see the attitude and the sentiment that the market currently will not be too surprised if rate will be at the same level, if Bank of England will not cut the rate. And take a look on then the direction. So the probability has dropped from the 75% to the 50% just within the couple of weeks. That also indicates the sentiment of the market. That's why I would suggest that Bank of England probably will keep rate intact tomorrow. What does it mean? It means that our bullish picture that we have specified on the daily has all chances to success within the 2-session scenario. Recall what we talked about in previous time when we talked about this picture. It's 24th of January. We said, well, if market hasn't shown real breakout and starts calling in the triangle, it stands more in favor of possible stronger leg to the upside, and the C point could shift. So we are not canceling totally the possible ABCD action down, but this price action mostly supports the idea of the shifting of the C point higher and its completion of some upward action before the second leg of downward retracement will start. And currently, all tools exist for this step. I mean, Bank of England tomorrow, And also take a look, guys. Here we have actually hidden bullish divergence. So MACD stands flat while market is forming high lows. So I would suggest that indeed we could get upward action tomorrow. On the forward FM chart, take a look. Our previous scenario has completed pretty nice. Our regardless triple to sell has worked and drop has happened, but as you can see, it has even shown great result. On the background of this coronavirus spreading across the globe, you could see that was some pressure on the currencies that are not in safe haven on the stock market, and as a result, market has dropped not just to the 130 area as we thought initially, but shows minor pullback, it's continued downward action. But currently, guys, we have some hints on a possible starting of the upward action. First of all, we have the morning star pattern right at the bottom. Second, what is also attractive is market stands very close to the previous lows. And actually, that is a validation point for a bullish scenario. If somehow market still will break this C point to the downside with some collapse, well, that of course will tell you that no upward action will happen, because market in this case actually will form the bearish reversal swing. And that will just suggest that the second leg of the retracement is starting. And in this case, if market will take it out of the C, we will have to take a look at this A, B, C, top, D pattern. So, but once market is still holding here and forming the bullish pattern, we could think about taking the long position based on this pattern. This first moment. Second moment, you could see on the hourly chart. On the hourly chart, guys, we have this steep regardless triple to buy, because with this downward action, market has completed perfectly the ABCD pattern, and here is forming something that looks like the hand and shoulders. So I would suggest that somewhere around 130 area, 130.05, around this fib level, it is possible for taking the long position. So if you would like to stick with this smaller scale of the trading, you could not consider the lows right here, but you could stick directly with this pattern and keep an eye on these lows. So for your purpose, you could use this 29.75 area and place stop somewhere below it, because if market should not drop below this level, because here is actually it is forming some reversal shape. So that's for those of you who are trading on the minor scale, on the hourly chart, on the intraday charts, maybe on the 15-minute chart. So that's the pattern to consider. Others, you could watch a bit greater scale in more global picture. In this case, you could also keep control the price action with these lows, because that's really decisive point for a bullish scenario on the daily chart. So that's what we see right now on Great British Pound. As you understand, situation not very simple, because the Bank of England meeting involved in this setup, but taking into consideration recent events, what is going on right now, and changing of the expectation of the market, we suggest that probably Bank of England will keep the rate intact, and that could push Great British Pound higher in tomorrow's session. That's what we'll see right now.